And let's first talk about inflation. India's retail inflation, that's the CPI, eased to a three-month low of 6.77% for the month of October. It's come down significantly if you compare it to September, which was 7.4%. But it's much higher than the RBI's upper tolerance limit of 6%. Now, to put that into perspective, retail inflation has been above that tolerance limit of 6% for more than 10 consecutive months. The Monetary Policy Committee of the Central Bank factors in CPI data while preparing its policy. It has raised key interest rates by 190 basis points in this financial year. But what will be the stance going forward? Let me first go across to Maithili Busrumat, who's breaking down the entire print for the month of October. Well, let me come to Maithili in just a bit, but I have with me now Devendra Pant, India Ratings and Research, and Siddharth Sanyal of Bandhan Bank. Welcome to both of you. Mr. Pant, let me come to you first. Is this a base effect that we're seeing?
No, the adverse base effect was there last time when we were looking at September, because August 21 to September 21, there was a decline of 95 basis points in the inflation. And that gave a adverse base effect to the September print. But when we move to October, between September and October, there will be a difference. There was just a 13 basis point increase in the retail inflation, and 13 basis point increase is not unlikely to have any impact on the inflation rate. So it is not a base effect phenomena which is seen, which has led to decline in inflation.
Mr. Sanyal, can we say that this is a sigh of relief? And for the Reserve Bank of India as well, another 35 to 50 basis point hike has been factored in. Could we see a change in that estimate?
Well, I would put it like this, that in my view, October softening of the print is a combination of statistical factor, but at the same time, there is some sign of some of the numbers turning out to be slightly softer. My sense is that particular trend of slightly softer food prices, etc., might be a little more pronounced in the month of November. Possibly we have a bit of a sense, not necessarily a formal number, but we might have a bit of a sense as the RBI goes into the next round of policy sometime in early December. To some extent, the US print a few days back and today's India print would possibly provide a bit of a sigh of a relief to RBI and policymakers in general. But my sense is that it's not necessarily just one print, but at this juncture, we are possibly moving towards a zone where RBI might actually think of shifting to a slightly softer gear. We need to take into account in less than 6 months, rates have been hiked by 190 basis points. Going ahead, every time a 50 basis point kind of a clip size may be too aggressive. So I'll not be surprised if we get to see a 25 basis point hike rather than a 50 this time.
So we'll ease it down to 25 basis points. You agree with that, Mr. Pant? This gives a little room to the RBI?
Yeah, other than what all Siddharth has said, I will look at how the currency has behaved in last few days. And when we are talking about the imported inflation, stability in currency provide a very good handle to RBI to control inflation. So I think our base case will be at max 25. Won't be surprised if there's a status quo. Won't be surprised, because we all know impact of monetary policy is felt with a lag, and RBI has been consistent in their communication, saying that they don't want to bring it down inflation to 4% at one go, because that will amount to killing demand totally. So they are looking at first moving to 5 and then moving to 4. So most likely it could be anything between status quo to 25 basis point, depending on if there is no adverse number, no adverse development happens between now and the Monetary Policy Committee meeting.
Now, that's the key question, depending on whether there's no adverse development. Now, Mr. Sanyal, looking at the big picture over here, energy prices continue to remain a pressure point. Consumption hit possibly continues to remain a pressure point, global recession, etc., etc. The Fed also, we don't know if they're going to continue with the pace of rate hikes. What really would be that factor that changes the situation as far as the Indian context is concerned?
It depends on whether there is some additional exogenous shock, whether that develops over the course of the next, say, 3 odd weeks, 3.5 weeks, before we get the RBI decision on 7th of December. In case if you get to see, for whatever reason, geopolitical tension, or for some other reason, if you get to see a bit of fresh spike in oil prices, that might be the negative factor that Devendra ji is possibly pointing out, or there is any other similar exogenous shock for whatever reason, if it comes on the currency. These are some of the things you can think of. But otherwise, the baseline scenario is such, very clearly we are possibly will be surprised if anything more than a 25 basis point hike is delivered this time, and if the RBI doesn't move to a slightly softer gear.
Right, we're waiting for a slightly softer gear. This is one reason, definitely. A good October print. We'll have to see, of course, how that continues to pan out. Thank you so much, Devendra, Pant and Siddharth Sanyal, for joining us this evening on the India Development Debate.